Welcome back to Explain the Charts. Today, September 11th, 2025, we're putting the spotlight on Apple stock, ticker symbol Apple, following a week of significant news and market movements. As of our current market scan, Apple is trading around $229.46, showing a slight recovery from yesterday's close of $226.79, but still well below its 52-week high. The primary catalyst for recent volatility was the highly anticipated iPhone 17 launch event on September 9th, which, to Wall Street's disappointment, was largely perceived as underwhelming. Analysts and investors cited modest enhancements and incremental upgrades rather than revolutionary breakthroughs, leading to a classic "sell the news" reaction across the market. This sentiment was further compounded by a lingering concern that Apple may be lagging behind other tech giants in artificial intelligence, a critical area for future growth. While some positive news emerged, such as a favorable court ruling for Apple's AI ambitions against Google and an increase in iPhone Fold shipment forecasts, these were largely overshadowed. This all unfolds against a backdrop of complex economic signals, including a dramatic slowdown in the U.S. labor market, ongoing debates about Federal Reserve interest rate cuts, and yet, paradoxically, the S&P 500 and Nasdaq hitting new record highs. Today, we'll connect these macro and micro events to Apple's price action and chart patterns. Let's begin our technical deep dive by examining the daily chart for Apple, looking at the broader picture over the past year. From mid-2024, Apple demonstrated a robust uptrend, reflecting strong investor confidence that propelled it to its impressive 52-week high of $259.02 in December 2024. This peak established a critical psychological and technical resistance level that the stock has since struggled to reclaim. Following this high, Apple entered a period of consolidation and a noticeable pullback through early 2025. Observe the multi-month resistance that formed around the $240 to $245 level, which repeatedly capped upward movements and became a significant area of supply. A striking feature on this chart is the sharp, albeit brief, correction witnessed in April 2025, where prices plummeted to the $170 to $190 range. However, this deep dip was met with equally strong buying pressure, indicating that fundamental demand still exists for Apple at more attractive valuations. The subsequent recovery, while substantial, found renewed headwinds as it approached previous resistance zones, suggesting that long-term investors are keenly watching for definitive catalysts. Now, let's bring our focus closer, specifically zooming into the daily chart from August 1st, 2025, through to yesterday's market close on September 10th. In the weeks leading up to the iPhone 17 event, Apple stock exhibited a clear pattern of consolidation, trading generally within the $225 to $230 range, reflecting a period of anticipation and indecision among investors. The announcement's underwhelming reception is starkly evident on September 9th and 10th, marked by pronounced red candles, signaling a sharp increase in selling pressure. Notice the significant uptick in trading volume during these 2 days, which was notably higher than the average for the preceding consolidation period, confirming strong conviction behind the selling activity. This intensified selling caused a decisive breakdown below the immediate support levels established during the August consolidation. As of yesterday's close at $226.79, the immediate critical support levels to monitor are the $220 to $222 range, often correlating with the 50-day exponential moving average, a level analysts are closely watching. Further down, the $216 area, corresponding to the longer-term 200-day EMA, represents a more substantial technical support that, if breached, could signal deeper corrections. To truly understand the rapid market reaction, let's switch to the 15-minute chart, providing a highly detailed view of Apple's price action from September 9th through the end of September 10th. On September 9th, immediately following the iPhone 17 keynote, we observed a rapid and sustained sell-off, with multiple large red candles forming in quick succession, indicating a swift reevaluation by the market. The high volume accompanying these initial declines underscores the urgency of investor sentiment shifting from anticipation to disappointment. Despite some fleeting attempts by buyers to step in, price struggled to hold any significant intraday support, continuing its descent. On September 10th, the selling pressure persisted, driving the price further down and testing new intraday lows, ultimately closing significantly lower than the previous day. The intraday high of $234.48 on the 9th and $234.30 on the 10th now serve as immediate and formidable resistance points. For short-term traders, this volatility presented both increased risks and potential scalping opportunities, particularly for those on the short side. Watching for signs of exhausted selling, such as decreasing volume on down moves or the formation of bullish engulfing candles, becomes crucial on this time frame for potential short-term reversals. Returning to our overall daily chart, let's synthesize our analysis into a forward-looking perspective for Apple stock. For the bulls, despite the immediate post-iPhone 17 stumble, several factors provide a foundation for long-term optimism. Apple's robust ecosystem and immense brand loyalty remain powerful assets, ensuring a resilient customer base even with incremental product updates. The recent positive court ruling mandating Google to share search data is a significant, albeit understated, win, potentially bolstering Apple's long-term AI chatbot and search tool development. Additionally, the reported substantial increase in shipment forecasts for the upcoming iPhone Fold signals confidence in a new product category that could drive future growth. Supply chain automation and robotics initiatives should improve efficiency and potentially preserve margins against external cost pressures. Furthermore, optimistic analyst price targets, some as high as $290, suggest that many still see considerable upside, viewing the current pullback to the mid-$220s as an attractive entry point. For the bears, the immediate challenges are more pronounced and directly influence the recent price action. The persistent narrative of Apple lagging in the crucial artificial intelligence megatrend is a significant overhang, especially when competitors are seeing AI-driven rallies. Investors are demanding breakthrough innovation, and the iPhone 17 event failed to deliver, fostering skepticism about future sales growth. Market saturation in the smartphone sector limits organic growth, making revolutionary products even more essential to spur upgrade cycles. Potential cost increases stemming from tariffs also pose a threat to Apple's impressive profit margins, a key attraction for investors. Recap of important price levels to watch. Immediate resistance. The $230 to $235 range is paramount. Reclaiming this level with conviction would be the first sign of a short-term bullish reversal. Beyond that, the $240 to $245 zone acts as a formidable, multi-month resistance area, proven difficult to breach throughout 2025. Immediate support. The critical $220 to $222 area, correlating with analyst-identified 50-day exponential moving average, is the first line of defense. A breach here could quickly lead to a test of the $216 level, which aligns with the longer-term 200-day EMA, a significant technical stronghold. Major long-term support. Should the selling pressure intensify, the $190 to $200 range, which acted as a strong demand zone during the April 2025 correction, would be the next significant level to closely monitor. All-time high resistance. The $259 to $260 mark remains the ultimate aspirational target for a sustained bullish breakout, requiring significant positive catalysts to achieve. Unbiased predictions and conditions for likelihood. Short-term consolidation/slight recovery. 55% likelihood. The most probable near-term scenario is for Apple to stabilize and consolidate between $225 and $235. This stabilization would be reinforced if the broader market remains buoyant and no additional negative Apple-specific news emerges, allowing the sell the news effect to subside. We might see minor bounces as value investors or short-term traders step in. Further decline to key support. 35% likelihood. A more pessimistic but plausible scenario involves a continued decline, especially if AI concerns persist or the broader market experiences a correction. A decisive break below the $220 support, particularly on elevated volume, could quickly see the stock retesting $216 or even the $200 level. Sustained negative analyst revisions and weaker than expected iPhone 17 sales data would reinforce this bearish outlook. Strong, rapid rebound, 10% likelihood. A sudden, significant upward surge is currently less likely without a major, unexpected positive catalyst. This could involve a groundbreaking AI partnership announcement, a revolutionary product leak for next year, or an unforeseen change in the competitive landscape that fundamentally shifts the innovation narrative surrounding Apple. Key things to look for: keep a vigilant eye on upcoming economic data, particularly inflation reports and Federal Reserve interest rate decisions, as these significantly impact tech stock valuations. More importantly for Apple, watch for any concrete announcements or leaks regarding its long-term AI strategy, which are hinted at for spring 2026. Also, monitor early sales data and analyst feedback on the iPhone 17 lineup as it rolls out, as this will provide real-world validation or rejection of its current value proposition. Finally, always observe trading volume. A significant increase on either up or down moves can indicate strong institutional conviction and a potential shift in trend.